Rahul, you mentioned their US import demand and exactly what sort of levels we're at. There's quite an online battle about what the statistics mean at the moment. And we've seen reports that US imports in August were consistent with non pandemic years in terms of volumes. The National Retail Federation reported steadfast retail sales despite continued inflation and higher interest rates in the US. But others report a muted peak with COVID inventory overhang still a factor for many US importers and demand still tepid. And of course, freight rates are being pretty soft most of the year, and they haven't really shown any sort of signs of recovery in this supposed peak season. In fact, they've been falling large chunks of August. So, how do you see the US import market for the rest of this year and into 2024, Rahul?
No, no, it's confusing, right? So in a sense, you have to look at it from perspective of the last 3 years. I won't look at it year-on-year basis or not even pre-pandemic, because I think that was a distortion which played out over the last 2 years, right? So US economy, like I said, has been extremely strong. The labor market, services, inflation, and if you look at the data, this quarter GDP is running at 4%. But if you go back pre-pandemic, US GDP at 4% growth would mean a very strong container demand. That's what we linkages were there. I think those linkages have been broken because the dynamics or the internals of that growth is very different. You're talking about services and not manufacturing. You're not talking about consumption demand. So retail sales are strong, but that's again drawing down the inventories, right? A lot of demand was front loaded. And like I said, our expectations of slowing US growth, our economics teams is forecasting now US GDP growth below trend in 2024 to around 1.5%. That's down from 2.5%, right? So outlook is that since the US demand outlook is weak. So again, and the numbers say that, right? US imports from Asia down on 25-26% the first 7 months. And in our view, next year is likely to be flatlining. We're not expecting any swift recovery. It will be a marginal uptick because a lot of inventory drawdown should filter through by the end, by this year, early next year, and we could start looking at a slightly better peak season in 2024. And the last thing there is, as in we look at the blank sailings, that certainly indicates the weak demand. The expectations were there, just didn't filter through, and then we're back to those blank sailings. Yeah.